I mean, I've got three pairs as usual, three good pairs ready to collapse. You guys know me, man. I like the bearish market. For some reason, I just like selling, man. Just something about selling, to be honest. I don't really like buying as much, but I like selling the market because of gravity and all that. So a quick one. So last week and last 2 weeks, I came on here actually to talk to you guys about the pound sterling, and as things stand, we're actually gonna have to smash the first take profit, which I'll be talking to you guys about in my chart once we get to the chart. And then also I got two other pairs that actually line up nicely. You guys know this series is all about 3 pairs and 3 pairs max. Yeah, if you're new to the channel, my name is Desmond Samuel. I've got 4 years of trading experience. I'm a swing trader, and this platform is where I come to tell you guys about the top 3 pairs that are actually ready to pay us. I mean, collapse. Anyway. I think I just like market. I just like the bearish market, man. I don't know, man. I just like selling. So episode 1 we called out the pound sterling, and then that actually went ahead to hit take profit, and then we're actually en route to the second take profit. Although we've actually gone into some form of a range, which I'll actually talk to you guys about in the chat once we get there. But I've got like 2 extra pairs ready to collapse, which I'm actually going to talk to you guys about. But before I get there, guys, please click on the subscribe button. Listen, this is a series. Yeah, I've got 3 pairs. Every single time I come here, 3 pairs, and these pairs always bang. You can check the history. These pairs always bang. I've got out the S&P, I've got out the US 30, I've got out NASDAQ, I've got a pound sterling, I've got out AUSD, I've got out USD CAD, USD. Bring your pair. I'll call it out and it will collapse. Can I just get to the charts? Because I'm actually always eager to get to the charts here. Alright, so without any further ado, let me get straight to the chart and then show you guys what's actually cooking right there. Let's go. Now traders, welcome to the inside of my screen. So the first pair on that day will obviously be the pound sterling. So I came on here quick one last 2 weeks to actually call out the pound sterling. For those of you guys who didn't actually get the chance to see the full video, I'll leave the link somewhere around here like so. So it was a very simple trade breakdown. It didn't take me more than 5 minutes to spot this guy headed to the downside though. So it all started as me spotting this fake out here. Then next thing I saw the new trend formation. So it just took a very simple turn there. So this was a high, this was a low, lower high, lower low, lower high, lower low, lower high. Yeah. So entries were somewhere around here like so. You see, it was a simple 4-hour time frame entry that we actually took advantage of here and here. So first entry, second entry. So we're actually sitting route to overall take profit at 1.31463 like so. Now whilst holding this, of course there was FOMC on Wednesday, and then this actually sent the market higher. It beats back to a point of entry, and then it's starting to collapse from there. So what do I think about the pound sterling moving into next week? Now you really want to be careful with this guy, because at the same time you cannot afford to ignore the fact that this has a trend line, descending trend line here that has been broken out of. Okay, so we are back inside of the trend line. Okay, that's nice. So actually back inside of the trend line, because initially when I checked the charts, you were actually trading outside of it. So I was a bit careful with this guy. But now that we're back inside, I have no iota that the pound sterling will most likely collapse further to the downside like so. On the daily time frame, our targets remain the same as usual, 1.31463. So if you're still in this trade, I would advise you to hold on to your trades. I have my entry still open, floating profit. I am not exactly in a rush to close this trade because I'm targeting the entire 1,000 pip collapse on this guy, which is most likely going to happen here. If we are able to breach 1.31463, guys, I can guarantee you, by the mercies of God, this pair will most likely collapse to the tune of 1,000 pips. Now on the other hand, I want you guys to pay attention to something very closely. Now you see this bullish engulfing candlestick here. So this was on a Thursday. So FOMC came out, this was a candlestick, then this was a Thursday, was a bullish engulfing candlestick. So now two things could happen here. Is either this would most likely reverse to the upside, but chances of that happening are quite slim, because for that to happen, we have to put in a bullish engulfing and then break above this level. So I'm not exactly expecting that to happen, but in the event that it happens, you obviously know what to do. Yeah, if you look closely, what we simply experienced here was just a revalidation of the supply level. Yeah, so if you look closely, this is again this is a high, this is a low, lower high, lower low, lower high, lower low, lower high, yeah, equal highs. Okay, so now this technically seems to happen whenever the market wants to test or validate a level. And if you look, that has pretty much been the tone for the entire previous waves that we had here. Anytime we put in a new low and a new high, the market just comes back to just validating the bits, and that's what's happening here. So you see this drop here. So this was a drop. Okay, the supply creation, then a retest, drop, supply creation, retest, drop, supply creation here, retest, drop. So I'm not exactly surprised that this is happening here. Now, one of the ways to actually know what's happening or what most likely happening in the future is to actually look at the past. Yeah, so because the patterns in the market are never really, you know, new. Every single thing is just the same. It's just that the sentiments kind of like shift from pair to pair and then from season to season. Yeah, this is exactly why you need to grab the call, so that this gives you the best strategy that is applicable to all market conditions, so you don't even bother blowing your account. Yeah, so now as it stands on the pound sterling, I'm still in this trade. I'm actually very confident of the trade. I have no answer of that this guy most likely rotated to the downside. All right, so now if you hadn't had any prior entry, I would not even advise you to try and enter at this point. Let's wait it out and see. Okay, let's just wait it out and see. But for this, as far as this market remains below 1.34592, I can guarantee you for a shorty, as far as you remain below this yellow bar line, so we're actually obviously going to collapse lower. Yeah, so that's just that for the pound sterling. Are there any issues so far? Nothing really. So just see this as a trend continuation chart pattern, because this is obviously the top here. So just see it as a trend continuation pattern, and in the event that I do spot something that is actually disturbing, I'll be here to let you guys know exactly how you can navigate that particular issue. Yeah, but once you breach the level, my next level target for the pound sterling would be at this recent low here, which is at 1.27074. Like, so once we clear this base, it's a free fall. Yeah, it's a free fall on this guy. Again, 300 and something pips from here to here. Yeah, so now let's look at the other pair that I have in mind now, which happens to be the S&P 500. Now, I didn't exactly talk about the euro dollar because it's still in a range, but if you want me to talk about that one, I can actually include it. But man, this series is just for top 3 pairs, and I don't want to miss it up with any crap. Yeah, 3 pairs that have money to pay us, and that is all we need this season, man. So looking at the S&P, if you had been watching my video for a while, I actually came on here to talk to you guys about this arc. Yeah, and I said to you guys that whenever you see an arc on a pair in a trend, especially after such a long stretch like this, it's most likely gonna, you know, reverse this particular trend here. And that, if you look closely again in the past, you can always see this happen. Look at the arc, it melted. Okay, so this was a stretch, the arc formed, it dropped, stretch, arc formed, dropped. I can remember predicting this was the tariff 2025 March tariff, February March here. I call this pair collapse. Once you get the link to the video somewhere around here, like so now this exact same thing happening around here, and I can tell you for a shorty, all things being equal, we are definitely going to see a collapse on the S&P 500 in the next couple of weeks. Yeah, because now this is the arc that usually leads to the rest of the collapse. Now, if you scale down to the daily time frame, obviously this is a long overdue. I mean, if you're a seasoned technical analyst, you will understand that this is long overdue. Yeah, because this is a low, this is a high, higher low. So this is a low, this is a high, higher low, yeah, higher high, higher low, higher high. So technically speaking, yeah, for the market to continue in an uptrend, it has to come and give us a higher low somewhere around here, like so. Technically speaking, yeah, all things being equal. So this is in no way a problem if you're a seasoned trader. Okay, so now if you want to learn how to grab so now if you want to learn how to count your waves, the link is in the pick comment, so check out the course. So now scaling down to the daily time frame, you can clearly see this in a broader perspective. Yeah, so we are kind of like in a cluster, in a range, and you guys know that after a task squeeze comes a breakout, and any direction the market breaks out into, it will move exponentially. So now in this case, that's what happened on the S&P 500. So moving into next week here, you want to ask me, Desmond, how are you planning this trade next week? It's a very simple thing. Yeah, scale down to the 4-hour time frame. So you see how we are working our way all the way from the weekly to the daily and not to the 4-hour time frame. Now look at the wave pattern here. Look at the previous structure pattern. This is something very crucial. Now anything you see the market do previous, at least for the past 3 waves, it's most likely replicate that in the forthcoming pullbacks. Yeah, so now if you see in this range, if you had like a high, had a low, lower high, lower low, lower high, equal lows, lower high, so you can clearly see that after every pullback comes a supply level creation, and then the market pulls back to test it and then collapse. This is exactly what happened here. Once you form a new low, there's a new supply, test it, collapse, new low, supply, test it, there, collapse. This is a new low here. This is a high, this is a low. Supply level is formed already. A pullback here is what we're actually looking at for, and when that happens, this market is definitely bound to collapse. All right, so now let's look at the left hand side of things, as I always want you guys to do. So left hand side is just for you to come and look at the potential levels that could actually hinder your trade, or way to actually place or take profits or stop losses. Yeah, so now in this case here, I'll be targeting these lows here. All right, so from here, so the next the next sensible low to target is all the way at 6,363 basis points. So this is how it is going to look like here. So what we need to see is very simple. There is going to be a Fibonacci play, obviously, from swing high to swing low. So this match is technically around the 6,650 region, like so. Now quick one, I think there should be a trend line connecting this bad boy here. So from this very high all the way down to this point, like so, you can clearly see that. Okay, so now this trend line is a pretty far one from here, but I will not be surprised if the market attempts to actually come and test it. Yeah, so have your options open. But for me personally, S&P 500 is going to first of all pull back to 6,625 basis points. Once that is confirmed, is a collapse all the way to 6,363.12 basis points on the S&P 500. Like so, there you have it. That's our second pair. So first, the pound sterling, we're actually waiting to see how things are going. S&P 500 collapse to the downside, and then let's talk about. Now, I would have spoken about NASDAQ though, but something I'm seeing is not really okay. Let's talk about NASDAQ, quick one. Yeah, so now this is going to be a very dicey trade. Now this is not going to be your conventional trade. This is not the kind of trade I like to call out. But now, due to my experience and the technical analysis side of things, I can tell you that this is one of the surest trades I'm actually going to take in moving into the next couple of weeks. Now, what do I actually mean by this? Look at the NASDAQ real quick. Again, similar thing that happened on S&P. After a long stretch comes the arc pullback. Long stretch comes the arc pullback. Now in this case, we have a double top on the weekly time frame, guys. Pay attention to this. Double top on the weekly time frame is a significant chart pattern not to be joked with. Yeah, so now as you can see, and I've told you guys here on this channel that after a chart pattern is formed, market tends to pull back into at least half of the length of the entire chart pattern length, and then before it actually continues in that direction. So looking at this carefully, you can clearly see that since we have a double top on the weekly time frame, the market has to come back and at least give us test half of that length. Okay, so now straight out to the daily time frame, like so. This is exactly what it looks like. Now you can see, even if you use your Fibonacci, anything you want to use, always look at this level here. So this will most likely be the midpoint here. So now counting the waves here, so this is a high, this is a low, lower high, lower low, lower high, lower low. So the market seems to have a supply level at 24,600 basis points. Now this is, like I said, non-conventional trading here. This is not the kind of trade I actually like to call out, but it's gonna bang. Okay, so how do I know this? This is a high, this is a low. So this is where the midpoint is at this point here. So where we actually want to be waiting up for the NASDAQ is at 24,469. Okay, I don't like to call out this kind of trades though, but this is a good trade for you to actually take. Yeah, so allow the market pull back into 24,490. Like so, once it tests it nicely, then you can actually scale down to your 1 hour time frame. Now for the indices, I permit you to go down to the lower time frame to make entries because the pip count is actually very huge. So be free to go down to the lower time frames and make your entries. There is absolutely nothing wrong with that. Yeah, so the pound sterling to the downside, the what's it called now, the S&P downside, the NASDAQ to the downside. Okay, so I have no iota of doubt whatsoever that these pairs are bound to collapse. Now if you're taking the NASDAQ trade here, I would recommend you keep your take profits at 24,000 basis points. You know why? Because this market could really blow to the upside. Yeah, so there is no practical guarantee that we're going to breach this level. Although this is a double top, but a chart pattern is only confirmed if and only if it breaks the neckline. Okay, once it breaks the neckline, then it is confirmed. Now in this case, the neckline is pretty much still intact in my own opinion. Yeah, so allow the market pull back into 24,400 basis points, somewhere around here, like so. Entries are done 1 hour time frame, 30 minutes time frame, 50 minutes time frame of your choice. Then hold all the way down to the 24,000 basis points, and once you smash 24k, please take out your money. Yeah, let me even scale up to the weekly time frame and see if there's a trend line to worry about. Okay, so now prime target, if we do actually breach 24,000 basis points, is all the way at 21,000, or what's this bad, 21,500 basis points for NASDAQ long term. Now during the course of this series, I'll be here to let you guys know exactly how you can position yourself wisely. And those of you guys who like to buy stocks and hold, this is the one for you. And those of you guys who like to day trade, these guys swing trade, whatever thing you like to trade here, this is the channel for you. That's why you need to subscribe to the channel, turn on the bell icon as you do so. All right, so I've actually covered the top 3 pairs that I think, in my opinion, have what it takes to pay us going into the next couple of weeks. They have each other, so these pairs are the ones I'm actually locked in right now. So I actually kind of like glance at the rest of the pairs, but these three ones are the ones that have my maximum attention at the moment. Now guys, this year 2026 is not the year to do trial and error anymore. You've seen the results, you've seen the trades, you've seen the potential trades here. This is the time to take your trading game to the next level. And if you're interested in this, I recommend check out the pinned comment, guys. Grab the mentorship program. It is just next to nothing yet. Save yourself the stress of trial and error every single time. Grab what works. You've seen the results. Results never lie, man. You've seen the trade calls. You've seen I've done this over and over and over again since 2021, and you too can get to this level. Yeah, I desire for you to get to this level. It is my utmost desire that you guys one day get to this level of mastery where you're able to call out trades confidently like this, and they're the bank. It's not something that you're making us about, they actually bank. All right, so if you're interested in that, the link is the pinned comment, so check it out. And then also, if you're interested in one-on-one mentorship, that service is also available. So send me an email and we'll schedule a meeting and they will discuss how I can actually come through for you. For now, trade safe, apply proper risk management, and guys, please subscribe to the channel and turn on the bell icon as you do so. Let me know what you think about the pairs or what other pairs you have in mind. For now, I'll see you guys next time, and trade safe and peace out.